Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 16th of July. Starting off with Argo Blockchain, where it looks as though there's been a bear trap from below that old May low there at 96.5 pence. End of day, end of week close today above that number, and we could be heading back towards that falling resistance line there from February, and the 200-day moving average at £1.15. Even if we fall back again after that. So looking slightly better than certainly than it did yesterday, when it looked like we were ready for a move down towards the 60 pence zone. But at the moment, above 96, looking for 115 on Argo. Next up, a stock which seems to be looking forward to the time when we can go to the cinema and get sneezed and coughed on. Here we've got a similar situation to the one at Argo, with a bear trap yesterday. That was below the initial January support there at 60 pence. And while we're above that, looking for a return towards perhaps as high as the 200-day moving average at 74 pence initially, and then best case scenario up to the 50-day line at 85. But all of that while we're above basically yesterday's support and also the initial support of the year. Requested stock next, one which I haven't actually looked at before, but here we have it, a bit of a novelty. Here we've got a bear trap from below that old December low there on the daily chart of Esken at 20.3 pence. We've had a sort of a little push below that over the last couple of days, but bounced back quite well today. The view here is that at the very least we'll be looking for a return towards the June support area around 24 pence. Best case scenario target over the next month, maybe back up towards late June resistance, 27 or 28 pence, but a bit early to say, or too early to say at this stage. Good bullish divergence there ahead of the rebound that we had today. So we had much lower lows for July, but the RSI was actually lower when the price was higher last month, if that makes any sense. On to a stock with an announcement today, which is first of its acquisitions from Glantus. Here we have a situation where the shares have gapped up, which is pretty interesting given the way that we spiked down earlier in the week. The view is that while we're above the floor of the gap at 78 pence, we should head back towards the 50-day moving average area, maybe the low 90s over the next couple of weeks. But it looks like that acquisition has been well received. On to a stock which, again, is rather obscure, Hike or HEIQ, depending on how you pronounce it, not quite sure. But if we go with Hike, we can see that the shares have gapped off the low, also bounced off the support that we had for the shares in December, so just under £1.20 there. I think the low there around 118.5. So above the floor of the gap, which is £1.27. Looking towards former support for the shares in January around 150p, and I suppose the best case scenario target here would be for the stock to rebound towards the 200-day moving average, currently around £1.68 by the end of next month. Stock which has been rather painful to watch over much of the recent past is Emu Pharma, but on a day where there's hardly any opportunities, at all on the long side, we've got a solid 10 trend line break there for the shares, breaking that late November resistance line at 9 pence. Longer the shares can remain above 9, then the greater the chance of a move to fill the gap down that we had in February up towards the 12 pence area over the next month to 6 weeks, if the shares remain above the 9 pence area. I think only at this stage back below the 50-day line around 8.6 pence, really questioning a potential recovery there at Emu Pharma. On to a stock which I think I called the lows a few days ago, but shares still trying to frustrate the bulls at the moment, still trying to find support as if it needs to at around the 2 pence area. Probably the best thing here for MGC Farmers is to wait for an end-of-day close or a weekly close above the 50-day moving average at 2.5 pence, just to be sure that the stock is ready to go up and stay up. But there has been decent bullish divergence there over the last week or so, which does suggest that we are close to the shares hitting the bottom there. Stock which has been slightly frustrating given the sort of pandemic everywhere that we've had is My Health Check. Should have gone up and stayed up when it rallied at the beginning of the month, but needed another go at the 50-day moving average. We need an end-of-day close above that particular feature for my health checked around the 4 pence level. If we can get a daily or weekly close over the next week or two above the 50-day line, then one would expect or hope for the shares to return to the 5.5 to 6 pence area sometime next month. Not so difficult with Pantheon, which is probably the stock of the week in some ways, given that it's actually gone up and behaved itself. Here we had a 60 pence target at the top of that rising trend channel from the autumn, which I gave, I think it was yesterday actually, the last time I looked at it. But an end of day close above 60 pence now could take us to the rather ambitious looking target there, up to 75 pence by the end of next month. And the longer the shares remain above the latest gap at 55 pence, the greater the chance of 75 over the next 4 to 6 weeks. Stock which I normally wouldn't look at, but because of the dearth of situations, here it is. If I can get the right ticker code, we've got super dry coming up, hopefully, and here we can see that we've got the shares bouncing. I suppose a sort of narrow bear trap were there yesterday, so the low there in June was £3.63.5. The low yesterday, 360. So a nice little bear trap there, and bounced quite well off that as well. 50-day moving average rising quite sharply as well. So the longer we stay above the initial support of this month, 385, the greater the chance of a move not only to the 50-day line at £4.20, but also to retest the best levels of the early summer up towards £4.60 plus, and that could be seen by the end of next month. More usual fare comes in the form of Zoltav, which is being quite encouraging at the moment. It looks like we've got a mid-move consolidation and an imminent breakout through that consolidation. The level to break is 48 pence, so an end-of-day close above 48 pence could take the shares up to a new leg higher, which may eventually lead to 85 pence over the next couple of months. So looking pretty steamy there at Zoltav, especially the way that both the 50 and 200-day moving averages are rising. The run-up to the golden cross that you get from that is normally the strongest part of the cycle. So let's see if Zoltav can live up to the technical promise. That's it for me today. More updates on Monday.